Hey guys, this is my 38th video in the series of videos concerning things to make the IRS go, Today I'm talking about income and deduction mismatch. What does that really mean? That's where your income somehow is way more than the deductions that you would normally have in that type of business. Or I should say, where deductions are so few relative to the income that you have. And then, why is that a problem? Well, first of all, you're gonna be red flagged, or you most likely will be red flagged for having, a tax return that looks kind of, suspicious, right, frankly. So that doesn't mean that there's an issue, right? I mean, the IRS will come and audit you or whatever, and they come and look at your records and they see that everything looks good. The problem is, why would you, unless that's what it is, why would you point yourself or point a finger at yourself, pretty much, right? So no one really wants to pay taxes. Everyone wants high deductions, but ultimately, if it's going to cause you, if you're putting deductions that are not legit, not real on your tax return, you're going to call attention to yourself. And the IRS is going to want to audit you and or the state, and they want to ask you for records, documents, source documents to support your deductions. Now, if your deductions are legit, like I said before, you're fine. But you don't want to call attention to yourself unknowingly. Okay, so that's what happens with a lot of people. They put these crazy deductions on their tax return and they call attention to themselves. And you just don't want to have that happen. That being said, there are cases where your deductions are pretty high, right? And even though you don't have a lot of money coming in, at least documented by the IRS, or third parties haven't sent the IRS documents to show that you have all this income to pay those expenses, you may have money coming in. It could be a loan from a family member. It could be, maybe you took money from a life insurance policy, right? It could be any number of sources of income that, by the way, are not taxable, okay? These items do not have to be taxable, and therefore it's perfectly legit that you would have those items of income to be able to support your business, especially in its infancy stage, right? Usually when businesses are starting up, they really have no money. So if you can get money from a third party or a third party source, that's fine. But I'm just saying to you that you may unknowingly or unwittingly call attention to yourself. So guys, just be aware of that. Very important stuff. And catch you next time. Peace.